Good morning, everybody, and welcome. Thank you for joining live. I know most everybody's harvesting and got lots of other things going on this time of year, so I'll just jump right in and we'll get started. What I've got in front of you here is a chart of soybeans on the daily continuation chart, and I've got this scrolled back to 2016. And here's what I want to show you, and I think you'll see some similarities to where we're at real quick if I show it to you. So here's the move in 2016 that went from 850, and here we are on the right edge of the chart at right around 1018 to 1020, and you can see that the market just kind of banged around. But what I want to show you is down here on these lower indicators, we got extremely overbought. Is this sounding familiar to what we've been talking about for several weeks on beans? So we got extremely overbought, and by all practical measures, we started to get sell signals. But look at what happens. The market just keeps on going. It extended this rally from an overbought position by another $1.50 all the way to 12 bucks, and it did it between. See, this is May 9th, and the peak was over here on June 10th. So it did it in less than 30 days, and it stayed overbought and diverged the entire way up over here. So ultimately, the divergence worked, but stepping in and selling it was very, very dangerous moving in. So now take a mental picture of that setup, right, with these diverging indicators on the bottom with a runaway bull market on the top. And what I'm going to do is now scroll it out to the weekly chart, and I'm going to move it over to the current move, and because I want to keep it in perspective. So on the daily chart that we're going to look at in a second, we look very similar to we did in 2016. We have a big runaway move, and we've started to get overbought, and we've started to get lots of indicators giving us some sell signals. But look what's happening on the weekly chart. We talked about this range a lot, which was back here at the beginning of 2018. This is before the trade war started, okay? We were trading at 1056. And the carryout at this time was projected to be close to 1 billion bushels. It was well over 750 million, and we were projecting a carryout closer to 1 billion. So I want you to think about that for a second, because what we've been talking about is a carryout of half of that, and we're only at the same price. So we've had this psychology for the last 2 years where our only salvation for low grain prices was China. We had to convince China to buy our way out of oversupply because our crops have just been getting bigger and bigger and bigger. I think we're at a point where we may be seeing a fundamental shift in psychology here, to where now we have different issues. Now we're no longer dependent on China to buy because of phase one. We're now expecting them to buy because they're short food. If you read the news, China is rationing food. Their restaurants are serving half portions. Their students are being required to send pictures of their plates at dinner time to their teachers so they can verify that that they've cleaned their plates. The richest people in China are doing social media posts of them saving food so they don't waste it. There's lots of issues happening, but technically this 1056 level, okay, if we go to the top of this range, 1056 to 1071 kind of marks the top end of this range that we traded in for a lot of 2018. Okay, this is February 26th. This is May. So February to May, we traded up here in this range, and 1056 to 1071 held us. If we break through this range, we really have nothing to prevent us from going all the way to $12. And with what the USDA has now done on the balance sheet, there is a possibility that our balance sheet will continue to contract, and we could end up with a balance sheet of somewhere under 400 million, maybe even under 300 million, depending on just how aggressive the USDA wants to be. So if the trade starts to think that China has to buy and South America is too dry and our yield is, something close to 50 or below, then this probably is not going to hold it. So where are we, right? This is so here's the weekly. We could easily extend this higher if these ranges fall. I think there's a lot of work here for the next 25 to 30 cents on beans, but it can happen. So now let's look at the daily chart, and this is the last time we're going to look at the November daily November chart. We're going to roll to January next week. Here we are breaking out in the new highs. The indicators down here have been extremely overbought, and they're now starting to diverge, which in ordinary cases would be the beginnings of sell signals, right? So there's definitely some pause right in here with the weekly range being 1060 to 1070, that we should have heavy resistance. We could be nearing the end of this range, and there's some other things that point to that. The funds are in an all-time net long position. The number of contracts that are being traded are at an all-time high at over 1 million soybean contracts. You've got indicators reaching all these overbought levels. So I think here's the takeaway. There's downside risk in beans, although I don't think that we're going to collapse and trade a lot lower for a long time, but this move could stall out, especially if we can't break through 1060, 1070. But if we do break through 1070 and hold it on a couple of closing bases, then you got to give your deference to the highest time frame, and that's your weekly chart, and that is a go signal, because we've now just cleared massive resistance levels and could easily extend this move even higher. So I'll put this over. Here's a chart of open interest, okay? We've got over 1 million contracts trading, and the funds have just been buying soybean contracts left and right. That's an all-time high. That doesn't mean that they can't buy more. And if the global financial community, right, which has more money than it's ever had, decides that it wants to own commodities because of inflation or because of the story or whatever, then there is no limit to what this can do. It can go to 2 million if it wants. So just because an indicator is overbought doesn't mean it can go higher. The trend is your friend until the end, right? And if beans break through that 1070, then the trend continues to be up, and you got to just go with it until it gives you a reason to sell it. We thought that this was probably coming to an end. Nobody saw the stocks report coming out the way they did, where the USDA just honestly just fessed up that last year's crop was not near as big as they had thought they were. No one realized that was going to happen, but nevertheless, here we are, and I think there's a legitimate chance that prior to the report, we're going to push up into this 1070 level, and if we can close above it, man, I don't know where beans might go. They could get just flat out stupid if the trade thinks this balance sheet's going to go lower. So if you've got beans to sell, you can reduce some risk. You can start to market them. I would definitely watch this 10-12 level and not let that get away. If beans break 10-12, then that should open up a little bit more downside. I really don't think we're going down to $9. I don't think that we're going to go set new contract lows. I think at best or at worst, we move sideways and we establish a trading range for a while until we learn more. But right now, it really looks like we're just going to keep on trucking. And corn could easily drive that. So here we are. We've been looking for a deeper pullback in corn, but the USDA's absolute shock last Wednesday has changed this picture dramatically. Rather than this being the completion of a move up, it looks like we're just going to continue to extend it. And here we are at 740, knocking on the door of 390, which is yesterday's high. Your out months, so your March is trading 397, May's at 402. There's a very real chance that December corn here will move on up to 4 and challenge the highs of the year at 40, 405, 411. There's a very real possibility that that's about to happen with this expansion move to the upside. Notice we have a 13. It sold off. We've now taken out that high, which is extremely bullish. There's really no end in sight to where this thing would go. I would think that $4 mark would cause some pause, but if the trade is right and it's penciling in a balance sheet of sub 2 billion and a balance sheet that's even tighter on beans, then that can really push corn a lot higher, especially going into December and January. So I'm not a bear on corn here at all. I think we could easily work a lot higher, so I keep that upside open. Again, 377 is probably an area that you want to watch, and if it starts to challenge that, make some more sales and start reducing some of that downside risk. But the downside's probably not as extreme as it once was, just because of the landscape that has shifted. Let's look at wheat real quick. Wheat's on an absolute tear, and this is the market that makes no sense when you really think about just traditional supply and demand, because we have plenty of it. We have huge ending stocks. We don't really have any major global problems or anything else, but yet we're moving higher anyway. So something is happening here in these markets that it's just causing massive uplift. And that can be dollar rotation against inflation. I read a good article that the Turkish government, has just been buying physical commodities to transition their currency into commodities to hedge against inflation. And if governments are going to take that approach into a food shortage, then these uptrends can just continue. Now, wheat is clearly trading at its high of the year, right? We're on the verge of eliminating even a divergence here, which would imply higher prices in the future. The strength behind this latest move is extremely high. And even though we're going to get a 13 right here, it's like beans and corn. Just because we're getting these sell signals doesn't mean these trends cannot extend. So I'm definitely not one that's going to step in and short these markets on 13s because they're too powerful. Something is unfolding here on the weekly charts and the monthly charts that negates the sell signals on the dailies. So it's kind of a difficult situation to say, yeah, we're probably overdone, and yeah, we've probably got a little downside risk, but I'm not going to sell it because the upside is even stronger than what the downside risk would purport to be. So if wheat trades back down and challenges the $5.15 to $5 level, that $5 is all the way down here. If it were to challenge that level, it might signal an end to this trend. Otherwise, it's in full force. There's no end in sight to where it might go, and you just got to sit back and let it play out. So for next year's wheat crop, we're just going to sit tight and wait and see where it goes, and wait until it tells us that it needs to that the downside risk is growing and that we need to move to the sideline. Okay, so what happens next year if the bean carryout drops and we push that soybean carryout uh, sub 300? Then that supports much higher prices. Um, and if the reason for the decline is the perfect storm of bad South American weather, a smaller U.S. crop, and food shortages in China, then I don't think $12 will hold beans. I think they could get flat out crazy if all of those things tick. So that's why we don't want to step in and just be a big seller, and we don't want to take any drastic action with next year's crops because we don't know what the weather story or what the acreage battle is going to entail um, in January, February, and March. And I think it makes sense to keep your powder dry so we can watch that unfold and see what happens. All right, that is 16 minutes, and I'm starting to repeat myself a little bit, so I'm gonna shut up and just summarize by saying the trend's your friend. You got to let it go until it tells you that it's not going to go any higher. And as Jeff's reminding me, every time we trade, there is a huge risk of loss. This industry is not for everyone. So remember, this is just my opinion, and certainly I'm not representing that it's going to do anything specific. So if you have questions, please give us a call or talk to your brokers and get their insight as well. We will talk to you later. Have a great week.